All right, how's it going, everybody? We're just gonna wait for a few people to get in here on the live stream. I started to fire it up here just a minute ago, and it didn't work out very well. I had messed up the title, so I started to re-upload or restart the live stream here for you guys. So, pretty interesting times out there in the lumber industry. I'm not going to talk about lumber today. I just wanted to kind of briefly talk about it before everybody starts getting in on the live stream here. There's a few of you. So a lot of people are asking why are the lumber prices spiking as high as they are, and it's not surprising to me. We have an extreme amount of volatility taking place right now in the futures market and just in general out there amongst the builders. Now, personally, I'm in a small area. I'm not in like the big cities or something like that where you have a lot of big time builders. There is some people who do a lot of projects around here, but for the most part, most guys around here are doing two, three, four, maybe five houses at a time. Not like the 150 houses that you see some major builders are doing. But still, even though these are some of the small time builders, they're still like buying in huge volume. It's panic buying by some of these guys. Like, they want to make sure that they can secure their framing lumber and their plywoods. And just for an example, we have one customer here local who bought a truckload of lumber and a truckload of plywood, like an entire semi, like what a normal lumberyard would order for their inventory. This guy is buying, and he's going to have it on hand. And that is something that is not very typical amongst, the smaller time builders, but yet that's what's taking place. All right, cool. Let's not talk about lumber today. Let's just talk about these neutral rates and what the Federal Reserve is going to do as far as lifting rates and how far they can possibly go with it. Now, I left a link down in the description for you guys to an interview with a gentleman who is talking about this very thing. And from what he is saying in the interview is that the Federal Reserve is probably not going to get much more beyond 1.5%, maybe 2% on the Fed funds level. And that's a lot of what I have been predicting as well, is that they probably wouldn't go beyond 2% at these Fed funds levels, simply because that's where neutral is. And now, the Federal Reserve and their neutral interest rate, a lot of times you'll hear it referred to as R star, like it's the future projection of where interest rates are going to be. I don't know how to quite describe it, but ultimately they have this idea of what neutral is, where the Federal Reserve is neither accommodative nor restricting the economy. They're neutral. And right now, that neutral rate is really low. It's like 1.5% to 2%. And this is something that they have been battling with for a very long time. I mean, in fact, I bring up that John Williams speech all the time, where he's referring to this low neutral rate world and how the Federal Reserve is going to be able to deal with this low neutral rate world. Because ultimately, the next time that we go into a recession, the Federal Reserve is going to be in somewhat of the same position that they were in when the pandemic kicked in that they could not raise rates far enough to drop them significantly to battle a recession. So they knew that there was going to be a problem. They knew it. And this is where, like, I feel that a lot of the reaction that the governments around the world and the people had towards the pandemic was more in line to give the ability for the Federal Reserve to have this opportunity to raise their rates. If you can shut down the supply chain, if you can create all these bottlenecks, if you can cause the inflation to go rampant, then the Federal Reserve would have an excuse to raise rates. And that's what I really feel is taking place right now. And, if you go and I'll find the link and I'll put it into, when the video uploads, I'll put it in there. But it's that John Williams speech, and the title of it is Monetary Policy for a Low Neutral Rate World, if I remember it right. And that's what he talked about, is that there's just simply no room to move at this price level. And so that was the idea behind it, is that how do you get like stimulus into this like economy when you have interest rates as low and you cannot drop interest rates any further than they are. See, that's where I feel that this pandemic was really kind of used as an excuse for the Federal Reserve to conduct a lot of the monetary policy that they have. I mean, we've already kind of discussed it just recently, talking about how the corporate debt lending facility, the special purpose vehicle that they had set up during the unusual and exigent circumstances of this pandemic, because normally they would never have been able to set up that special purpose vehicle. They set it up, they funded it with a lot of money, bought a little bit of corporate debt with it, but then that credible threat that they were going to go out there and buy that corporate debt sent the markets into that corporate debt. They went out there and front run the Federal Reserve. Now the Federal Reserve is sitting back saying, hey, good job, boys. We didn't really have to buy any corporate debt. All these corporations were able to sell their debt off to the market, and now we can just back away from it all. Just the credible threat alone was enough to bail out these corporations by the market participations by itself, without the Federal Reserve actually even participating in anything. All right, so what are you guys talking about? That's exactly what's happening in my area. BlackRock continues to snap up single family homes. Either I do that or expect to a lower, or export to a lower cost country, but that may be a one-way trip. One and done. They cannot raise interest rates in one shot. That would not be possible. In fact, the idea of raising rates just by itself is pretty much doing the job of the Federal Reserve to raise rates. Because the raising of interest rates really is more about a market perception now. I mean, it does have impact on the economy. You can't say that it doesn't. But they really haven't done anything yet. I mean, they're still quantitative easing. They haven't done monetary tightening yet, even though everybody is talking about the Fed's monetary tightening policy. In fact, there's articles I was reading about how the world's central banks are following the Federal Reserve's monetary tightening policy. It's like, until they actually tighten the monetary policy, there's no point in saying that they're doing it, right? Unless you're trying to establish the credible threat to get the market to behave in a fashion that is as if the Federal Reserve has tightened the monetary policy. This is where it just drives me nuts when I read this mainstream media stuff, because they just so push these narratives that just simply don't exist. I mean, they're just not there yet. The threat is there, the likelihood is there, but the actual event hasn't taken place yet, but people are believing that it is, especially if you just don't follow it as closely as like a lot of us do. You just, like the average person out there who's reading headlines and stuff, they may feel that the Federal Reserve is in a monetary tightening policy right now. Not that they would know what that is if they don't know already what the position is from the Federal Reserve and the quantitative easing. But a lot of people reading headlines might feel that, or might sense that that's what's taking place. But anyway, I'm babbling. What else are we talking about here? Market isn't going to crash, but a downturn correction is always possible. Yeah, what I feel is probably going to end up happening, and I think a lot of this, like, we can kind of take notes from when the Federal Reserve had tried to raise rates back in, like, what was it, 2018 or so, and they got the Fed funds level up to around that 2%, right? That 2.5%. That's the neutral rate, and then all of a sudden the economy is just like, nope, we're not dealing with this very well, right? We're going to head into recession, but they couldn't raise interest rates any further, even though they wanted to. They were trying to get that ammo back. But the previous administration had no problems with it. They said, hey, you guys can't raise your rates any further, but we can still get the real interest rates up. All the administration has to do is come out and say there's no inflation, right? So that's what Trump did. He came out and said there's no inflation, the Fed should be printing money and dropping interest rates. And he lowered the inflation expectation, which raises the real interest rates. And the way the easiest to explain that, I mean, a lot of you who follow me, I've explained this, several times to you guys, but it's real easy to understand the real interest rates. If you are an investor who is anticipating you're going to get a 2% interest rate, or a 2% interest off of your investment, and inflation expectation is 1%, the real interest rate is 1%, what the investor anticipates they're going to get after the inflation expectation. If you can lower the inflation expectation to 0, the real interest rates rises to 2%. So when the Federal Reserve could not get the Fed funds level up any further, and they wanted to raise the real interest rates, all the administration has to do is just come out and say there's no inflation, and convince everybody that the Federal Reserve should be printing money and going into negative rates, and that everything was awesome, and that there was no inflation, and the inflation expectation drops, the real interest rates rise. So we can expect, we can expect that somewhat of that similar situation to take place after the Federal Reserve can no longer raise their interest rates. So once they get their, 6 or 7 hikes in, when they get to 1.5 to 2% on the Fed funds level, you're probably going to see an extreme amount of mainstream media narrative about how the inflation has dissipated, how it's all gone, there's no more inflation, and they're going to drop that inflation expectation dramatically so that they can continue to raise the real interest rates. I mean, that's something that I feel is probably going to end up happening. Much like how they're trying to push the degree of monetary stimulus right now by raising the inflation expectations and keeping the real interest rate, or keeping the interest rates low. So to kind of describe that for you, if you can imagine that you are going to take out a long-term loan at 3%, like a mortgage, but you anticipate that there's going to be 7% inflation going into the future, you can secure your purchasing power at 3% right now, as opposed to losing it going into the future. So this inflation expectation and a low interest rate pushes that degree of monetary stimulus. It gets people out there spending that money before they lose that money to inflation, or lose the purchasing power to inflation. Right on. 200 of you guys here today. That's so awesome. All right, let's see. Oh, 4.99 super chat. Thank you so much. Economic Ninja predicts a huge housing price drop. What do you think he is wrong? He has it wrong? I don't necessarily think that he has it wrong. And are you talking like a huge price drop from where they exist right now, or are you talking like the average, like over the last 10 or 15 years? Because right now, prices of homes are so overvalued. It is just like, I mean, especially in areas like where I'm at, where it's like an incredibly hot market. I could see where prices in those areas could come down. I mean, that would seem like realistic. But in other areas, where the markets weren't as, where the prices weren't driving up as fast as they were in like places like I have, or I'm at. When that situation took place, it just really gave a lot of room for speculation, and it gave a lot of, like, not a real market. I don't know how quite else to explain it, but it's not reality. And so when you see like the idea of interest rates rising, I could really anticipate that maybe home prices would probably end up plateauing for a while. And the main reason is just because the inventory levels are so low. And so the only way to really adjust the inventory levels is, for one, to either build a lot more homes, or for a lot more to become available that are out there. And now if you go off of like the Harry Dent kind of theory that there is going to be a huge demographics issue where you have a lot of baby boomers who are basically, passing away, opening up the availability of homes, then that could possibly happen, but it's not going to happen in like, the next year or two. It's going to take a long time. So really you would have to look at like interest rates and what mortgages are going to be, what mortgage rates are going to be like, as far as like how that's going to reflect into the asset prices out there. And even with mortgages going up, as far as the interest rates, they're still really low. Like historically, they're really low. And so if you could see interest rates rise dramatically, then that would put maybe like a crash scenario into the housing market. But I don't see them going up dramatically. I mean, I see them ticking up. I see where mortgage applications are dropping. Like they dropped 10% from a month ago, and 12% from a year ago. So people are really cautious about the housing market, and where prices are probably going to go. But again, because of the low inventory levels, and the logistical nightmare of building new inventory up, I just don't see where house prices are going to crash. I mean, they could very well drop, but I don't know. I mean, I just don't see them crashing at this point. All right, home loans are a bank product built for banks, not for consumers. Yeah, nobody. Yeah, I can agree with that. Nobody cried about what I said. Very based. Okay, I don't know what that means. People can only afford what they can afford. The foreclosures are coming online with a higher rates. Fewer will even go look. Um, Hey, right on. Some more super chats. You guys are so awesome. $5. I'm using all my play credits to send this. Well, thank you. What is it? 10 10 T T N N. I don't know what you. Thank you very much for the super chat. I super appreciate it. What do you think of Peter Schiff model when it comes to inflation? Um, I missed the other thing I was saying there. I'm sorry, guys. My mind is just all over the place today. What do I think of Peter Schiff and his? I learned more from Peter Schiff than any other individual out there. I followed Peter Schiff for years, years and years, and I tell you, I really like the information that he gave, the analogy, the analysis, everything that Peter does is awesome. Now, with that being said, the only criticism that I have towards Peter Schiff is that he's a gold salesman. And you have to think he is not going to tell you anything that would discourage you from buying gold. So that leaves a lot of information not being said, or at least not being contradicted by himself. You know, like he would never like back away from this idea that there's going to be a total destruction of the dollar, because he wants everybody to go in and buy gold. And that's there's nothing wrong with that from being a sales point of view. I mean, if I had something to sell too, if I was trying to sell silver or gold or whatever, I'd probably be putting out that kind of information myself so that I could, you know, do my sales. But I don't have anything to sell. So I don't really have any direction that I'm trying to, you know, convince you of. I don't care where you guys believe. I mean, if you believe in inflation coming to the future, or deflation, or, you know, that's not up for me to decide. I mean, I'm not here to try and convince you of anything. I'm just trying to, you know, learn just the same as everybody else is, put out some information, have a discussion on it, and see, you know, see where it ends up going to. Right on. You guys are just so awesome with those super chats. Let's see here. I just learned that emerging market ETFs pay lower percentage qualified dividends than developed markets. Hope this changes. Yeah. You know, right now, I don't know, between emerging markets and possible monetary policy tightenings and stuff for the next year, there's going to be so much confusion on what the stock market's going to do, on what bond market's going to do. It's going to be like, it's going to be pretty frothy to say the least. All right. Gold is a rock that gets stuck in a vault, no economic value. I kind of disagree. I believe that gold does have an economic value to it. I think that it would be an awesome currency. I think that it would be great to use it as a competing currency. Not that gold doesn't have its issues as far as being a like world reserve currency. It would definitely have some issues with it, but having sound money that does not give the ability for the government to just go spending and going into debt without, I don't know how else to say it, like unabated. You know, like there's no stopping this debt now, and if you had a gold standard, there would definitely be a stopping of it. You could argue Bitcoin is a lot easier to transfer than gold, therefore it's just better than gold. Now, I can agree to it being easier to transfer like Bitcoin as opposed to gold. So like I could do a transaction with somebody in another country using Bitcoin, but in order to get the gold to that other person, you have to trust a third party somehow of delivering it to them, or you have to go and do it yourself. So it'd be expensive to try and get this gold coin or a gold purchase to somebody who's like, say, not immediately in your presence. Bitcoin can certainly do that. However, I have to think about like, you have the two side by side. Which one's better, Bitcoin or gold? Well, think about this for just a second. Gold exists. It's in your hand. You can hold it. You can hide it. It's yours. Bitcoin is somewhat similar in the sense that if you have your private keys, you got it. You hold it, you own it, right? So these two kind of have that same characteristics to it. Here's the thing. Gold can exist without Bitcoin. Bitcoin would have a hell of a time existing without gold. Now think about that for just a little bit. makes gold better. Gold is a shiny rock for baby boomers. I disagree with that. I think gold and silver is an excellent way of for insurance. It's an insurance policy. It gives you something valuable that you get to have in your hand away from a third party. You do not have to rely on anybody else. If you have stocks, if you have bonds, if you have any kind of retirement fund, if you have anything that has like a piece of paper with a number on it that says, look, this is what I have, that is a third party claim, and gold is completely away from that. So it's not just a shiny rock. It does serve a purpose, and if you throw it away in that sense that it's just a shiny rock and it doesn't have any value, then you're missing out on a huge security aspect of gold. If this system crashes, everything goes with it, but not the physical items that you have in hand. All right. I got about 5 more minutes here, guys. All right. Cash is just paper then. Cash is not just paper. Cash is a contract, and this is different. I mean, yes, it is a third-party claim, but it's not just a piece of paper that says, it's made of wood fiber or something like that. It has, a lot of people don't realize this, but Federal Reserve notes are the first lien right, paramount right to the Federal Reserve's balance sheet. So whatever issuing bank produced that Federal Reserve note, if that Federal Reserve, like, whether it's the Dallas Fed or the New York, one of the Federal Reserve banks, whoever produced that Federal Reserve note, whoever issued it, if that bank happens to if they go bankrupt, or whatever, it's those who have actual cash, folding cash, the Federal Reserve notes, they're the ones who have the first lien right, paramount right to the Federal Reserve's balance sheet. Not saying that you're going to be able to go down there and get it, just saying that it's there. Right? So if you're trusting a third party, those Federal Reserve notes is what's going to give you the access to the Federal Reserve's balance sheet. And the very first thing they list is gold, and then followed by SDRs, which is a special drawing right. Now, the chances of you actually being able to go and claim those things are probably pretty low. But the ultimate idea behind Federal Reserve notes and the cash is that they are the first lien paramount right to the Federal Reserve's balance sheet. So they're not just a piece of paper. It's a contract, and that's really what they are. Food and ammo. Yep, food and ammo. You can never go wrong with those two. Do you ever think about using your channel to unite the people against all the corrupt politicians? I feel that's what I'm doing, bro. I feel that's exactly what I'm doing here. There is no other item in the entire world that connects us or unites us like the money does. Once we understand it, we can take the power away from them. So I feel that's what I'm doing here. A lot of people, they have a lot of extremism inside of them. They want to go and protest. They want to hold signs. They want to make demonstrations. Right? They want to go out there and push their agenda. I'm on a whole other front here, guys. I'm doing my part. I'm not an extremist. I'm not going to get out there and shove signs in people's faces. I'm not going to yell and scream. But I'm going to come out here and I'm going to try and change the way that I feel the world needs to be changed. And understanding the monetary policy, understanding the money, understanding what it is that they are doing in order to control the people. Once we know that, we take the power from them. So I am fighting them. This is my battle. This is how I fight. Real estate and gold, real things, everything. Oops, man, you guys are going so fast here. Everything else is just information. Yeah, things you have in your hand. Ooh. Skills. Oh, the beautiful Adriana. Look at you, love it. Thank you. Way more scams with fiat currency. Well, yeah, ultimately you think about, a lot of times you'll hear people say that, like, cryptocurrencies, especially when it comes to Bitcoin, is so that people can do nefarious illegal activities with it. Like, they want to do drug deals and terrorism and all kinds of stuff. Ultimately, drug dealers and terrorists, they want US dollars. So in the end, it's really the government or anybody who is saying that Bitcoin is used by illegal purposes is really just upset that it's creating a competition against the US dollar, because the US dollar is by far engaged in more illegal, nefarious activities than any other currency could ever possibly imagine of doing. So, I mean, if you really want to point blame at a currency that is involved in nefarious deals, it's the US dollar by far. I mean, all right. Sunny coast forecast for the weekend. Enjoy it. Well, I hope so. You know, February is one of the weirdest months for the North Oregon coast, because we always get like a good week of like just fantastic weather in February, and it just tricks everybody into believing that like spring is coming, and then it'll snow next month. So I bought my first Bitcoin in 2016 for $500. No regrets, right? But yeah, the first time I went to go buy a Bitcoin, they were $18, if you can believe that. I was going to buy two of them so that I could throw them around and figure out how they worked. But yeah, they were $18 a piece when I first looked at them, and this was before anybody even knew about Bitcoin. I mean, this was like before Mount Gox and stuff. Like I remember watching when Mount Gox failed. Like, I don't know how many of you know about Mount Gox, but they were man, I got to get going here. But they were like a magic card trading platform or something. They weren't even like into Bitcoin, but somehow they became like a Bitcoin exchange, and a lot of people were flipping Bitcoin on this dang Mount Gox exchange. Well, it turned out there was a lot of fraudulent activity taking place there, and the Bitcoin price started just dramatically falling, and it fell all the way down to like zero. Like, Bitcoin was like essentially worthless at the time. But the protocol kept working, right? I mean, just because the value from the US dollar on account of this Mount Gox exchange, it may have fallen to zero where you couldn't exchange your Bitcoin for dollars, but the protocol kept going. The Bitcoin kept the program kept going right along, unabated. Like, it never stopped the entire time. Anyway, Ola, enjoy the channel. How often do you go live? I try to go live once a week. But they're a lot of fun. I really enjoy the interaction that I get with the viewers in the comments. So I try to do these once a week, but really, honestly, I would love to do this like every day. I could sit out here and talk to you guys for hours and hours all day long. So, but yeah, I usually come out here for about, half an hour or so on my lunch. All right, man, another super chat. You guys are killing it today. Thank you so much. Hey, man, I love the videos and info. It's much appreciated. You think saving dollars in the bank will be problematic with the deflation happening soon? No, I don't. I don't think that keeping dollars, I mean, I wouldn't keep a significant amount of money in the bank, but, to keep like, your bills or money like that in there, if you're keeping a small savings account, like an emergency fund or something like that, I can see where that could be fairly safe inside of the bank. If there's a major deflationary scenario coming, and I don't think it's going to be like a major deflation, like you're going to see like all of a sudden, like these huge collapse of prices or something like that. Ultimately, you have to think, what is deflation? Deflation is the destruction of money and credit. Okay? What's inflation? The expansion of money and credit. So we have been going through all this expansion of money and credit for the last few years. If the Federal Reserve goes into a monetary tightening, where they are going to allow their balance sheet to just unwind on its own, like let the maturities just roll off, not even try and sell them, just allow them to mature and come due. That money comes back to the Federal Reserve, and unless they take that and roll it over into new debt by buying more treasuries or something with it, then that money is destroyed. That's destruction of money and credit. That is deflation. Now, if it affects the prices, that's another story, because prices are a symptom of inflation. All right, they're a symptom of the money printing, or the destruction of money would be the deflation is the symptom. So that's what you have to, or I mean, the price moves are the symptom of these two, of the money creation or the destruction. So that's really where you have to kind of think about is there going to be a deflationary scenario when it comes to prices? Well, it depends on how long the Federal Reserve and to what degree that they unwind their balance sheet and bring those dollars back into the Federal Reserve. If that happens to an extreme, then you'll see interest rates begin to rise and asset prices begin to fall. It's the major concern that everybody has right now, is that that's what we're going to end up seeing. Again, I could see where asset prices could plateau and maybe in some areas, drop I wouldn't say dramatically, but drop, fairly significantly. Those things could definitely happen. But right now, because the corporations seem to be already funded from, selling their debt to the markets last year, I really see like a lot of turmoil, but not necessarily like the crash that everybody is talking about. I don't know. I mean, it could happen. What do I know? I mean, all right. Last one, guys, and then I really got to go because I'm late going back to work. Did you get a chance to watch the video on the Bank for International Settlements? I've got about halfway through it. It's pretty hard. I thank you for the video too, brother. But the guy, I was trying to listen to it in the car. I don't hear very well, so I was trying to understand exactly what he was saying. So I only got about halfway through the video, but it's very interesting. I mean, it's obvious that there is going to be some sort of digital currency in play. Whether they discount it or push it out there as a possibility, to me it's like there's so much talk about it, it's just a matter of time before it becomes inevitable. But thank you very much for the video. I will finish watching it and I'll try and do a video that I'll review that particular video on its own. All right, you guys are awesome. Thank you so much for hanging out with me. What are we up to? 377 viewers and 133 likes. You guys are so great. All right, Uneducated Economist, you let me know.